If you're a business owner who accepts credit cards, an absolute fact of life is merchant processing fees. Now, oftentimes merchant processing fees are handled in a pretty smooth way. It's not uncommon for merchant processors to deposit the full amount that they receive from your customers into your bank account and then take their merchant processing fees out once a month or once a week. That, however, is not always the case. Sometimes merchant processing fees are taken out on a daily or even on a transaction by transaction basis. And this creates a little bit of a reporting complexity that we then have to deal with in QuickBooks. Okay, so let's say, for example, that I received a payment from several different customers. Actually, so let's say it was several different payments from customers, totaling a little over $3,000. But what was ultimately deposited into my bank account was a bit less than that, okay? The difference would be the merchant processing fee that I had paid. Now, there are a few different ways that we can approach this and think about this. If we don't have any invoices in QuickBooks, if we don't have any sales receipts that need to be recorded for those transactions because they happened to deal with items that are in inventory and we're recording that in QuickBooks as well, we can just go ahead and record the deposit of that money. And here is why. If we don't declare the merchant processing fees as an expense, and if we just declare what is deposited into our bank account, our net income number will ultimately be the same as if we declared the full amount that the customers paid less the merchant processing fees. However, this does mean a couple of things. First, our gross receipts are not going to line up with any 1099-Ks or anything else that is sent to us or our business at the end of the year. And on top of that, I personally really like, as a business owner, the ability to track how much I'm paying in merchant processing fees. I think it's an important metric of my business, and I want to be aware of it. Okay, so if that is the case, if you do want to be tracking how much you're paying in merchant processing fees, and if you want to be able to run reports on that showing your total gross receipts less all of those expenses of doing your business, here is what we can do to basically reconcile the difference between what is coming into our bank account and what our customers paid. Okay, so let me go into my bank transactions tab here. And I have a merchant processing transaction for $3,499.27. Okay, that's great. That is money that I received. Like I said, if I didn't want to go through the process of recording what my merchant processing fees were on that particular transaction, I could just go ahead and book this transaction to the income account that it belongs to. Okay, but if I do want to walk through that extra step and get slightly more accurate reports and complete reports for sure, I would have to do a few extra things, okay? So first things first, you're going to want to have a clearing account to put transactions like this to, okay? Now, the clearing account does a couple different things, and there are technically other ways that you can do this in QuickBooks. You can show a negative number when you do a deposit to account for merchant processing fees so that the deposit amount ends up being correct. It looks a little clumsy on the particular transaction, but it ultimately ends up bringing everything through accurately on the reports. But I actually have a different way that I personally enjoy going about this because it really does give the detail of what is happening. And if you are doing AR and receiving invoices or receiving payment against invoices from clients, it really gives you a firm double check on all of these numbers and how they're all coming together, okay? So my preferred way is to have a merchant processing clearing account. If you don't have one on your books already, no problem. You can absolutely set one up, okay? You can see mine account type is actually bank, and the subtype is cash on hand. And I'm going to show you why that is in just a moment here, okay? So for this particular transaction, let's say that I actually received $3,613 from my client, but the merchant processor kept $113.73 in processing fees. That is how we arrived at this number here, okay? So I'm going to put this into the merchant processing clearing account, okay? And then I'm going to hit post. Now, something to keep in mind, by basically booking this transaction as a transfer between two different cash accounts, I have not yet recognized the income from this transaction at this point, okay? The example that we're walking through is if there was a single transaction that happened, but it's possible that you might have multiple transactions happening over a month and you just want to record all of your income and all of your merchant processing fees for the whole month in one fell swoop. Okay, this is a bite-sized example of this, so you could either do this on a transaction by transaction basis or on a monthly, quarterly, or annual basis. So since that money was not yet recorded as income, where did it go? Let's go take a look. If I go to my chart of accounts over here, I can see that I have a negative balance in my merchant processing clearing account of that $3,499.27. Okay, so part of the reason that I like to have these accounts set up as bank accounts is because I want to see right at the top of my chart of accounts and right at the top of my balance sheet if there is ever a balance in any of these accounts, because ultimately this account, since it is stated that it is a clearing account, it should always be zeroed out at regular intervals. Okay, so now how do I go through the next steps to get this account zeroed out? Well, I'm going to click View Register right here. And there are a few different ways that we could ultimately go about this, okay? If you are recording a whole bunch of transactions at once, you might export a report from whatever your merchant processing platform is or from your e-commerce platform so that you have all of this data. But if you're doing it on a transaction by transaction basis, a journal entry may or may not be the right call for you. Totally up to you. If you do a journal entry, you can just go up to the plus create and then journal entry right here under other, okay? But if you're kind of new to transactions like this, it never hurts to do them in a slightly more analog way so that you can get used to how they should look. That way, if you do it incorrectly, when you switch to doing journal entries, you have a good idea of what the red flags are that you would be looking for, okay? So how do I ultimately get this to zero out? Well, a couple different things have to happen. First, I have to record the total income number that I received from my customer, which, like I said, was a little over $3,600, okay? And then I have to record the expense that was the merchant processing fees. So if I had invoices on my books and I needed to mark those as paid as part of this transaction, I could go through that process and have the money deposit into this clearing account. Since I don't have any invoices, I'm actually just going to add, instead of an expense, I'm going to add a deposit, okay? And I want the date of the deposit to be the same as the date of that withdrawal to the checking account. So that would be 3/20. And I'm going to put the full amount that I received from the customer. I'm also at this point going to say what income account that should go to. And for this particular example, it'll be bookkeeping services, okay? Now that I've done this, I can hit save. And what we'll see is that now we have a positive balance sitting in this account instead of a large negative balance. And on top of that, at this point, that is exactly the amount of merchant processing fees that I had calculated for this transaction. So now I just have to do one more thing, which is to record an expense for $113.73. Okay, so now I'm going to go ahead and click Add Expense. And then again, same thing, we want it to be on the same date. I'm going to put in $113.73. And then I'm going to put this to, let's see, do I have a merchant fees account? Yep, I have a merchant processing fees expense account. So I'm going to put that there, okay? I will go ahead and hit save. Now, let's go ahead and talk about what this actually does on all of the rest of our reports, okay? As you can see, we now have an ending balance of 0, which is exactly what we would want. I don't want to see balances hanging out in this merchant clearing account if at all possible, okay? Again, if you opt to do this monthly or quarterly, that is totally fine. Just be aware that if there is a balance in this account, it has to be addressed because this account doesn't actually exist anywhere. It is not a real account that you own. So let's go ahead and look at what this ultimately did on our profit and loss, okay? So if I go to reports and then standard reports, we'll go to our profit and loss. And just for the sake of simplicity, I'm going to run the report just for 320, okay? So we can see what's going on. Now we can see right here, we have that $3,613 coming in for bookkeeping services. And we have $113.73 going out for merchant processing, okay? Now I do also happen to have this transaction for $35 coming in the form of training materials. But if I didn't have that $35 transaction, I would see for my overall income number the exact amount that had been deposited into my bank account, okay? We would have, I believe it was $3,499.27. That's what I would be showing as my net income amount, okay? So this is why I was saying, if you only record the amount that you receive as income and don't record the merchant processing fees, it's not ultimately going to make a difference on your net income number, right? Where it makes a difference is we're then not able to track how much we're paying in merchant processing fees on our books, and what we're showing as income from our merchant processor is not going to match any reports that we receive from them down the road. Okay, so that is why we want to do this. On top of that, let's go ahead and look at our balance sheet and see what's going on there. So if I click on my balance sheet here, and we can look here and see our merchant processing clearing account has a zero balance, exactly what we would want to see. And if I click here into business checking account and look on 320, I will be able to see, yep, there is that deposit for $3,499.27, okay? A really fantastic feature of handling merchant processing fees this way is that you get to move on with the classification of transactions into your checking account without pausing to find out what income account it should go into. You can put it to the clearing account for the time being and then do that journal entry to clear the clearing account or enter the transactions to clear the clearing account at a later time and still have accurate reports, okay? Bottom line, this is a process that you're going to want to treat with extreme caution and care, okay? As you get started with it, you definitely want to be double checking yourself frequently. And you want to be sure that you explain to your CPA or anybody else what you have done and how it is impacting your reports, okay? If you have any questions, please do leave those in the comments below. I'm Holly from Accrual Mistress Bookkeeping and Consulting. I hope you found this helpful. If you did, please like and subscribe, and I hope you have a wonderful day.